Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can understand what we see out there and what we are positioning for. As you know, money management is an active process and we continue to watch the investment markets every single day. While I believe our clients are well positioned, we have started to raise some cash and sell some of our equity-based positions. One of the areas that we look at is our long-term market trend indicator, which is a compilation of various long-term moving averages. This has not only been back tested, but in real life has worked, in my opinion, exceptionally well in reducing substantial downdrafts in severe recessionary periods. Now, our long-term market trend indicator is really for severe recessionary times. The average recession, you will see the equity markets drop approximately 40+%. Right now, the markets are down around 15 to 16%, and our actual, we had a trigger on this as of a few weeks ago, and last week an additional one on some of the U.S. markets. As we get this market trend indicators that does trigger a sell, we start to liquidate various holdings in our equity-based parts of our portfolio. It doesn't mean we're going to get rid of everything, but it does mean we're going to start reducing risk systematically over a period of time. Usually over a week and a half to 2 weeks is very typical. The reason we want to do it over a time frame instead of all in one day is simple. If we do get a false indicator, and occasionally when our long-term market trend indicators like we saw back in August trigger a sell, abruptly 2 weeks later it actually triggered a buy, and that was because of QE2 from the Federal Reserve coming in and basically kind of helping rescuing the economy to get them back on track. We could have the exact same thing that happens with Jackson Hole on Friday. Bernanke could come out and basically announce a major campaign that could push the markets actually higher. Although we are very concerned about the slowdown in the U.S. economy and in Europe, we continue to think that hopefully that the government will do what's right ultimately in the long term. Although in the short term they've done a lot of blunders and basically have investors like you lose confidence in the system and in exactly what they are supposed to be doing for the taxpayers of this country. And I think so many investors today, because of that lack of confidence, have really not understood what's going on. And because when you don't understand what's really going on or the direction of our economy or our country, I think you start to pull back a little bit. When you lose lack of confidence, investors tend not to spend as much money, which could be a self-fulfilling prophecy pushing us into recession. Now, as I made a comment, the average recession, the markets drop around 40+%. Right now we're down around 15 to 16%. Jackson Holes on Friday. We've had a confirmed sell in our market trend indicators long-term on various equity-based markets. We have started to systematically reduce some of our equity-based exposure in case we really do go into a double-dip recession. I believe on the Philadelphia Fed numbers that came on Thursday, which were a -30 reading, and by the way, the Philadelphia survey numbers are basically a survey of businesses in that region, and it's a very good indicator of how the U.S. economy is doing. Never in the past have we not gone into a recession when the indicators were in that kind of range. So at a -30, we have always fallen into a recession. This could be the one time we don't, and it could be because of Bernanke on Friday. But the bottom line is those numbers were very, very troublesome with the slowdown in the U.S. economy and in Europe. So again, we're starting to reduce risk in portfolios. And what we're really doing is not only looking at what other assets we want to sell to reduce risk, but we're already gearing up ready if we start to get a rebound in those trend indicators, and if Bernanke and team come out and say, here is the policies that we're going to put in place that we feel are going to stimulate the economy and get us back on track so we don't go into a double-dip recession. So not only are we looking at the risk side of the portfolio, but we're also looking at the opportunity side. If, in fact, our market trend indicators change, we will be quick to change. So plan on a few more changes in the upcoming days and upcoming weeks in your portfolio. We're doing exactly what you're paying us to do, which is manage the risk within the portfolio and manage the opportunities. I truly believe that hopefully that the government will do ultimately what's right, although it seems like they keep having one blunder after another. One of the things that's been suggested that is finally coming back out, this was on the table last year and has come out in the last couple of days or so, is basically allowing or putting together a program, I should say, for homeowners who are severely underwater and their mortgages can't refinance at current rates, which are often 50% cheaper than the rates people had 2-3 years ago. They're looking at a possible program through the government. I think this would be a huge plus for the economy because you would take all these taxpayers who are paying their mortgage, are underwater, and wouldn't qualify for a new mortgage, where the government could basically come in, guarantee those mortgages on people, again, that are already paying, so these are not really at-risk asset mortgages, but substantially reduce the interest payment that people are paying on mortgages and put basically trillions and trillions of dollars back into the economy. This would be hardcore long-term stimulus, in my opinion. I've talked about this before on my radio show and on some of my update videos. If you do have questions about your portfolio, if you're concerned at all about your money, give us a call in the office. We love to talk to our clients on a regular basis. Not only do we do our regular updates with our clients at least twice a year, face-to-face, but most of our clients we do try to talk to at least quarterly. But if you want to talk to us, if you're concerned about something, call us up. We are here to help you. Another thing that I do want to announce is we are going to be putting together a few advisory boards for our offices, not only in Florida, but in Naperville, Illinois. An advisory board is comprised of usually between 8 to 10 clients, and we would be looking for volunteers, individuals like you, who would like to basically volunteer 2 to 3 hours once a quarter. Sit down for kind of a lunch scenario, sit down, talk about our business, what we're doing, what areas you think we could improve upon, what areas, what services you think we could add, what areas clients would like to see within their management of their accounts. But basically, we're looking for volunteers, 8 to 10 clients in various regions of Florida and in Illinois, looking for a volunteer advisory group. This would be comprised only of clients, and basically we would meet quarterly for 2 to 3 hours. We would provide you lunch and really just kind of talk about what we're doing in business, what you see, what you like, what you want to see different within our management and our service. If you would be interested in volunteering for a advisory board group, please contact us, call the office, of course. We would love to hear from you, or send us an email. But we are looking for volunteers. We are looking for 8 to 10 people. And if you think you'd like to contribute and help us out in your opinions about not only what we're doing, but how we can improve and build our company, we would love to hear from you. Until Sunday's show, make sure you do have yourself a profitable week. Make sure that you understand that we are watching not only the risk, but also the reward of your portfolio. We are watching our market trend indicators closely. We have reduced risk. We probably will reduce more, but those trends could change fairly quickly depending what happens on Friday. I just want to give you an upside on that. And as always, we do love referrals. If you know somebody's looking for an advisor, a money manager, let our office know. And about that advisor group, please contact if you would be interested in volunteering for an advisory group to help out our company continue to grow. Until Sunday's show again, make sure you have yourself an extremely profitable week, and thank you for your time.